Well, it's been an interesting time we're living through where some people aren't sure if they're going to have a job tomorrow. Meanwhile, we've seen the stock market moving higher. It's fair to ask questions about whether bubbles are forming. It's fair to ask questions in the housing market about whether or not you should be worried home prices are overheating in certain pockets of the country. Now, earlier we told you the former Bank of Canada governor, Stephen Poloz, is not concerned about that. You can see his comments in our interview that Amanda Lang did with him on our website. But there are some new stats today from Royal LePage that may back up what the former governor had to say. Let's bring in Phil Soper, who is the CEO of Royal LePage. Phil, nice to have you back on the program. And let's dig into some of the analysis that you guys have been doing, specifically on the issue of home price growth, because you're forecasting there is going to be some more momentum on that front into the end of the year. Is that correct?
Yeah, that's right. We believe when the curtain closes on this strange year, that home prices will end up 7% higher than 2019.
And let's talk about the driving factors behind that. I mean, there's a laundry list of things we could point to, but is there one that you would single out?
I'd say pent-up demand and monetary stimulus are the two big things. So very low interest rates stimulated the market post-financial crisis in 2009, and we saw the same thing unfolding in 2020, and it has. There was, I mean, people forget now, it seems so long ago, but there was a softening in the market during the actual lockdown in March and April. Prices did back up a little bit, and that, in combination with historically low mortgage rate, did attract a lot of particularly first-time home buyers into the market, those who felt comfortable with their personal financial situation.
So if I'm going to ask the broader question of whether or not there's a concern that home prices are overheating based on the analysis you're doing and the markets you're looking at right now, what would you say to that?
Well, they're clearly overshooting. There's no economic rationale for the housing stock in Canada to be rising in the mid-teens, and we're seeing that in many areas across the country. But there's a lot of pent-up demand. People also forget that we went through a pretty substantial market correction in 2018 and 19. Volumes way down, price growth ground to a halt. That was in the wake of B20, Bill B20, that put in place the mortgage stress test. So we had pent-up demand from 18 and 19. The first quarter was very, very strong. And then, of course, the pandemic lockdown, things ground to a halt. So you created another form of pent-up demand. You had it from 18 and 19, and the mortgage stress test. You had it from the spring, the pandemic lockdown. And a lot of that was layered on top of you call it a situation of chronic undersupply in our big cities just from normal organic growth. So three sort of sources of demand and limited supply. Prices are going to go up. Now they're not going to stay at this level. They can't. But we believe that we're going to taper off through the winter months as opposed to some kind of a hard reset, which is the norm in Canada.
You know, it's interesting to hear you talk about the stress test and all the language and communication around that. We did a story yesterday on some new data from MNP, where basically they found in their survey 47% of Canadians find themselves just $200 away from insolvency. Is there something I'm missing here where we went from talking about stress tests to ensure that we weren't seeing some kind of, bubble forming in housing markets to going back to seeing home prices moving higher at a time when so many people are basically saying in surveys that they are living close to the edge?
Our research shows the 70% of Canadians that are either in home ownership, they own their homes, or who are qualified to purchase a home. They're working and they have the necessary income to support mortgages, correspond pretty closely to those who are comfortable financially and working. So it's an uncomfortable social situation that we have so many young people in particular struggling to find work, but they tended to be in the rental market in Canada. So the real estate industry is one of the sectors that is actually, well, it's done very well during the pandemic, and part of it is because Canadian households are saving so much money. Their expenses are way down, savings are way up, and some of that capital is being reallocated into real property as people look at an extended work from home environment. They look at multiple people in a family, say kids in high school, two working parents, all working from home, and they're adjusting their living situation if they can. And to date, they've had the capacity to do that. Call it reallocate money into real property. The challenge is, of course, we only have so much property to provide people, and unlike some industries, you can't just spin a dial and crank up more supply.
Right. So based on what I've been hearing about this week, people buying iPhones, they're shopping on Amazon, they're not taking flights, and they're looking at their homes as places where they can do some spending. Phil, we only have about 30 seconds left, but I can't end this conversation without talking about the condo market, which there have been some challenges, and even part of it is the fact that it is closer, tighter living during a pandemic. While detached home prices and sales, we've talked a lot about them. Tell us what you're seeing in the condo market before we go.
About 5.3% prices up year over year compared to 10 in detached homes. So there's definitely more demand. But the biggest part isn't a lack of desire to own condominiums. It's the short-term rental market, foreign student market, and domestic post-secondary education market that's all very soft. So call it the investor market is very soft right now. But overall demand in the condominium sector remains solid. Not as hot as detached, but solid.
All right. Phil, always good to get your insight. Thanks very much for stopping by this morning. That's Phil Soper with Royal LePage with some of their findings in the housing